Welcome back. Former fast food executive Andy Puzder sworn in as U.S. ambassador to the European Union at the White House last week. Joining me now for his first broadcast interview since the confirmation is the man himself, U.S. ambassador to the EU, Andy Puzder. Ambassador, great to see you and congratulations.
Thank you, Maria, and Andy will be fine.
We're so happy you're back. You're a friend of this program, and we're proud of you and are happy for your success. So congrats on that. Give us a sense of what you want to do here, Andy. What are your priorities as ambassador to the EU? Particularly around these economic issues and the new U.S.-EU trade framework?
Well, everything will be under the auspices of trying to continue the president's Make America Great, America First agenda. We'll be implementing the trade deal that was negotiated. Thank God it was done before I got there, but implementing it's going to be a difficult task, and I'm looking forward to working with our Commerce Secretary and our trade representative to make sure that we get the right deal for the United States now that we've completed the outline of the deal. We've obviously got to deal with the over-regulation situation in Europe. Their regulatory grasp, their reach is reaching into the United States, and we're not going to be able to put up with that. There's going to be some things where we have to defend our sovereignty against this over-regulatory push in the European Union. There's China. We've got a lot of similarities with the European Union. There's a lot of ground where we can work together to cut back on the mercantilist trade policies that the Chinese have implemented globally that hurt Europe as much as they hurt the United States. And then finally, we've got the situation in Ukraine, and we need to we need peace in Ukraine. That's the president's goal, and I will do everything I can to support him in reaching that goal.
You know, I asked Christine Lagarde about all of these issues, Andy, and one of the most important, I thought, with regard to the war was the fact that Europe has not exactly embargoed Russia, right? I mean, here we are in the middle of this war, and the Europeans are still buying Russian oil. Can you affect change there?
We're obviously going to have to put pressure on the Europeans to take a more aggressive stance in that respect. They've now committed to buy $750 billion worth of energy from the United States. So hopefully we're going to be able to cut back on their importing of Russian LNG and other sources of energy, because Europeans can't be out there opposing the war and asking America to do everything in its power to oppose the war, and at the same time being facilitating it economically by purchasing energy from Russia. So this is something I believe that the Europeans would like to get out of. They're in a kind of a bad situation with respect to trying to keep their energy prices down and at the same time cut Russia out of the picture. But it's something that needs to be done, and we need to work with them to see that they can do it.
Well, there's also that $300 billion in Russian assets sitting in European banks, right?
Yes. And obviously that's a European issue, not an American issue. We've only got about $5 billion in American banks, and Congress has authorized the president to take action with respect to that money. But the Europeans are using the income from those assets to fund Ukraine, to help Ukraine. And whether or not they can go further is going to depend on whether they can do so legally and politically, and the United States is going to need to take a position on that.
Yeah, I would imagine so. That's what I asked the president of the European Central Bank. And here's Christine Lagarde on the trade conversation as well. Watch this. What did you make of the new framework between the United States and the European Union with regard to trade?
It is what it is. It has been negotiated. My hope, because my concern is stability. I don't want more uncertainty. Uncertainty has abated. We still have more than we had in the past, but I don't want uncertainty to come back up again. So if there is a deal, if that deal is 15%, if it's a cap for all good except those that are under particular investigation or due diligence, companies will adjust, markets will adjust. But I don't want this continued uncertainty.
So, I mean, I pushed her on the fact that you've got more Cadillacs you have more Mercedes in America than you do Cadillacs in Europe. Andy, are you going to try to even that out?
Well, prior to this trade deal, if you wanted to sell a Cadillac in Berlin, you had to pay a 10% tariff. If you wanted to sell a Mercedes in Detroit, you paid a 2.5% tariff. Well, those days are over. We're now going to be able to compete on price with European automakers in Europe, and we're going to be able to at an advantage in the United States because they're going to have that 15% tariff. So we're going to be rebalancing the trade, particularly with autos, and I think Look, the Germans are very anxious to see those 15% tariffs on autos come into place because we're now at 27.5%. And if you look what happened to Switzerland recently, where they're facing 39% tariffs, then, you know, there's a real feeling in Europe, I believe, that this 15% tariff is a good deal for them. It is a good deal for them. The president cut a very good deal for the United States. But I think, look, President von der Leyen, I think she did a good job for Europe too. They're going to have to buy $750 million in energy, but they need that energy. The $600 billion that they're going to invest in the United States isn't going to come from the EU government. It's going to come from private sector investment over there, which is different than what happens in Japan and South Korea. And finally, that 15% tariff, look, you know, Switzerland's facing 39%. 15% versus 39% sounds pretty good. So I think
that's a big deal.
Yeah, they've, and we do now have that. I believe we have the certainty that we need going forward. So I think it's going to be very beneficial for the United States and for Europe.
Yeah, no, I agree with you. I think that business has more clarity than it has in a long time, has had in a long time, as the European Union and the U.S. did finalize those key details of the trade agreement, giving businesses the clarity on tariffs, and we're seeing investment pick up. Ambassador, I just can't even begin to describe the amount of money that this president has been able to get back to America. That in and of itself is strengthening for this country. He's luring foreigners to look at the U.S. as the hottest investment again.
Well, you know, the big issue before the election, when you talk to anybody, whether you're on the right or the left, any economist, was we have to get the deficit down and we have to get our national debt down. And we've now got CBOs saying that the tariffs are going to reduce the deficit by $4 trillion over 10 years. We've got these massive funds coming into the United States, which will produce more tax revenue so that the United States can reduce the deficit and further and reduce our national debt. So you see all of these actions are designed to really improve the American economy. Economic growth can help us solve many of the problems that we're facing. Economic growth covers a lot of ills. And economic growth in this country is what we need if we're going to get that deficit down, if we're going to pay down the debt. Those are important issues. And we want to do it while Americans still have jobs and prosperity. So all of this figures into a great mega concept about making America great. I met with the president on Wednesday. The first thing I asked him was, what are you going to do for the next 6 months? I mean, the first 6 months have been so incredible, so beneficial to the United States, and this is all just a part of that larger picture.
It's true. What a great opportunity for you, Andy. Congrats again. Great to talk with you this morning. Thank you.
Thank you.
Ambassador Andy Puzder. We'll be right back. Stay with us.